So I want to spend a few minutes with you talking about what are some of the aspects of being an executor that may or may not be top of mind to either yourself or your client, and whether these aspects start to bring it outside that box, and you're going to make your own decisions as to whether you're going to be an executor or whether you're going to encourage your clients to be executor, but more importantly, you're going to add some value to the discussion. You're going to be able to say, well, wait a minute. Is it just about the fact that you have to be the executor because you are the right person in these circumstances? You're the person with some business acumen in the family. You're the only son in the business. You're the only daughter who ever loved your father, or those kinds of emotional drawings to it. And so I step back and I look at it, and again, knowing how lawyers can, I too didn't take Latin, but I know that our profession loves to still embrace Latin, but we also love to embrace, as all industries, terms of art, terms of description of what are expected of us. And what we do, and what the courts have done for the last 600 years, is they've said there are duties of an executor. It's not job, it's not, you know, the sort of an easy definition here. It's a duty, and it is an expectation that brings with it a profound definition in almost every case. So the duty to act even-handedly, unless the trust document says otherwise. Well, what does that mean, and what does that create, that kind of tension? Obviously, it creates an easy, identifiable tension in your industry because you've got high-performing stocks and you've got nice, safe investments below, and you're running your portfolio along, and are you acting in an even-handed, balanced way in your industry? Are you buying enough of the hard-running stocks or the forwards, as it was described earlier, and you got enough defensemen? Those kinds of things make common sense understandings to most clients. But then you get into an analysis where an executor could easily get into, and that is, what about the gray area? What kind of decision-making do I have to make? And again, the courts are saying, look at the document. So now, not only do I have to better understand what I think I understand, and that is the duty to act even-handedly between the income beneficiaries and the capital beneficiaries, I've got to look at the document, and I have to interpret the words of the document to make sure that it accords with my understanding of the even-hand rule. So that's just an easy illustration to show where the tensions can arise when you take on this job at a level that are misunderstood. And Rob was talking about, I love this, the perceived misunderstanding that you must take on the job or you must not take on the job. Well, these are perceived misunderstandings of what the job means. And that illustration, I think, is an easy one. The duty of skill and care. Well, those are just fancy words to say, you know, be careful and work hard at the job. But what about this? The duty to administer the trust in its terms and to give proper notices. Well, again, lay people are not going to be in a position to know and understand specifically what those notices are. They're going to need to take advice. But there's a duty. It's not just an expectation. I mean, not just a job. It's a duty and an expectation of the courts. So if you don't give proper advice to that individual, and if they're not getting advice, like you have to communicate with your beneficiaries, you have to give notices that matter, identifiable notices that matter, like within the first year of death, you better handle the tax scenario because there's all sorts of tax consequences 1 year after the date of death that the CRA is going to be all over you on. Those kinds of elements of the job are really aspects of the job that really go beyond what may be the understanding of your clients and maybe the understanding of yourselves. The duty to account. Well, what does that duty to account mean? Fiduciary accounting is, in and of itself, a completely different way to account. You prepare, when I prepare fiduciary accounts, it's not accounting that you would see with a balance sheet analysis. It's established through separate forms that have been around for many, many years. And it is essentially, I mean, the concept isn't that complicated. You got to show everything and show your receipts. It's how you present it and what your transactions were throughout. Well, the duty to account has a specific regulation under the Substitute Decisions Act that's very, very small font, not friendly for my eyes, and it's about 1.5 pages long, telling you specifically what that duty to account means in the eyes of the Ontario government, for example. So these kinds of duties are expanded into elements of your administration that are far beyond what the initial understandings are. The duty to invest, obviously that's something that is near and dear to everyone in this room's heart. And in the late 1990s, the Trustee Act was amended to take away the fixed list. They had a list of essentially the types of investments that we could make as trustees, and they said, no, let's bring it into the real world here. We have to have diversified accounts. We have to have a prudent investor rule like they have in the United States. And of course, the United States had developed it back almost 100 years earlier. But we brought into the Trustee Act in Ontario this idea that you have to look at your diversified portfolios. You have to do the kinds of things you're doing every day. But it also says you have to have, or you should have,